Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Monday, September 17, 2012. Well, a change of trend today, and the candle has made a lower high and a lower low. The candle we're analysing is the second last candle here. That final candle on the chart is currently developing, so we can't apply any analysis to that at the moment. But the second last candle here, we see a black body candle, and it's at the end of this uptrend. Prior to this trading, we had the market trending up very strongly, some congestion here but no change of trend. The market found support within this zone of previous resistance and now support, and will be support for this market if it does trade down to that level. But a small body, a white body candle denoting the buyers making only a very small amount of net bullish progress, set the market up for the potential change of trend. The buyers failed to continue with control of the market, and for today's trading we've seen a black body candle where the sellers have made net bearish progress. So quite a change of momentum in this market. We did, however, see the sellers attempt to take control of this market. They had enough commitment to trade the market down below the previous low and significant below there, and to trade the market down through the important support at 1767 and test to the support at 1755. This level of support has provided a very strong area where there was a price rejection, and we saw buyers come back into the market. So moving forward for tomorrow's trading, that is a crucial area if this market is going to continue trending down. And just looking at the way the market is developing at the moment, we have tested to exactly that level, and we are seeing rejection from there again at the moment. So that will be very significant for this market. Just looking at where the market's closed, it's closed only just below the midpoint level of the range, and that suggests that neither side has really taken control of this market. If anything, the sellers have weak control, but it's not terribly significant. And even though the trend is down, we have had the sellers lose that commitment throughout the trading day. In terms of the Fibonacci extension, and now that the market is trending down, we're examining the relationship of the first time frame downtrend to the previous time the market was trending down, and here we've seen the market test down through the 50%, the 61.8% level, and test to the 78.6% level, and find support at that level at 1754. So that could be significant for this market. The 78.6% is not a major level. The next major level we have down here is the 100% at 1748. So if the market does continue trending down, that's the level that we should be looking at for further upside price rejection. But the fact that we've failed to close down below the 61.8% level and close just at the 50% level may be significant for this market. So even though the trend has changed, the sellers have failed to support the change of trend to the downside very strongly, and they've lost momentum throughout the trading day. In terms of the Fibonacci retracement of the prior first time frame uptrend, and here we've seen no significant levels tested today. The next level that the market may be interacting with is at 23.6%, which is a minor level at 1748, and then the 38.2% level is a fair way away at 1729, and that's a more significant level, as is the 50% at the 1713. So no major interaction with any of these levels with the Fibonacci retracement. But in terms of Ichimoku, obviously a very bullish market in all three timeframes. We have the market trading above the cloud, above the Kijun-sen and the Tenkan-sen, so the market is bullish in the long term, medium term and fast term timeframes, and the Chiká span is above the corresponding price action. So it's confirming the bullishness that we've seen in this market in all three timeframes. The Kijun-sen has turned flat, and that's significant. Very often when it turns flat, price action is attracted back towards there, so it wouldn't surprise to see the market test to lower levels, and it does set this 1755 level up as a very important level for this market. If we look at the shadows on these candles here, there was strong price rejection up to the 1750 level in a zone extending down to the 1737 level, and anywhere within that area may act as support for this market if it does continue trending down, so we do need to be aware of that. We also have the Tenkan-sen coinciding just with the bottom of that level, around that 1736 level roughly. And then below there we have that zone of previous resistance and now support in this yellow highlighted area extending from 1730 down to roughly about 1706. Basically, we have a very, very bullish market in all three timeframes in the long-term, medium-term, and short-term timeframes. But we are seeing weakness now in the very fast timeframes. The short-term dynamics are no longer supported by the buyers. The sellers are attempting to take control. They've failed to do so in a significant way, and the 1755 level will be crucial. If we see bearish activity down below there, we could see the market trading further into this first time frame uptrend. But if we see the buyers come back into this market, bouncing off this 1755 level, 1767 becomes important, the area around this 1780 level, and if we see strong bullishness above there, then we could easily see the market trading up to the 1800 level resistance fairly quickly. But with the Kijun-sen pointing flat and the market looking rather overextended by trading a long way away from the Ichimoku indicators, I feel that we'll probably see the market test further down to this area just below the 1755 level.